Welcome to an answer session, a little Q&A. Had a couple of questions about something from the textbook about lender yield. Don't forget, when we see the word yield, we immediately think discount points. That's what that is. Lender yield is profit or yield to the lender. And it means paying them upfront or prepaid interest in the form of discount points. Why do we pay them discount points? Well, we don't always. We only need to pay the lender discount points when we, as a borrower, want to get our interest rate lowered. Maybe we can't afford the current rate. Rates have just gone up to pretty close to around 7%, or they're about to. And there are buyers who can't afford that. But if that buyer has a chunk of money, maybe their own, or maybe their parents, or maybe the seller or builder is willing to give them some money, they could use that upfront chunk of money to buy the interest rate down for the whole life of the loan. So instead of calculating the entire 30-year mortgage on a 7% rate, perhaps they could get it down to a 6.5% rate, for instance. So then that brings the question, how much does that cost? How much does one discount point cost? One discount point, it's easy enough for this class, cost 1% of the loan amount. Now, in the question here, it says, the title of this little section is Yield on Mortgage Loans Using Rule of Thumb Values. What does rule of thumb value mean? It just means we're acknowledging that we're going to work with the following facts. One discount point costs 1% of the loan amount. That's one of the rules of thumb. The other one is for every discount point, we lower the interest rate, the annual interest rate, by 1/8%. So, one discount point costs 1% of the loan amount. And then one discount point lowers the interest rate, the annual interest rate, the rate by 1/8 of a percentage point. So for this problem, for this question, a lender has quoted a willingness to make a borrower a mortgage loan for a 6.375 interest rate. If the borrower is willing to pay 2 discount points, at what interest rate would the lender be willing to make the loan? Okay, let's break it down. The lender is willing to make the loan for the borrower, but the lender wants to charge them and base their payments on a 6.375 rate. 6.375% rate. That's the rate at which they want to make them the loan. What happens if the borrower pays 2 discount points? What would the interest rate be? What would the lender lower the 6.35% rate down to if the borrower could somehow afford to pay them upfront interest, prepaid interest in the form of 2 discount points? Well, how much do 2 discount points lower the rate? 2 discount points, if 1 discount point lowers the rate by 1/8, 2 discount points lower the rate by 1/4, because it's going to be 2 1/8, and 2 eighths are a fourth, right? So we're going down by 1/4. What happens to the rate if we lower it by 0.25? Because that's what 1/4 is. If you need a reminder about that, just do the math here. Consider this diagonal line a division symbol. What is 1 divided by 4? There it is. That's the decimal version. So 6.375 minus 0.25 gives us a rate of 6.125. Now, are we finished? Let's see what it's asking for. Borrower's willing to pay 2 discount points. At what interest rate would the lender be willing to make the loan? And we're done. They'd be willing to make the loan at 6.125% interest, because that's how much the rate, what the rate would be if we subtracted 2 discount points worth away from it, right? 1 discount point lowers the rate by 1/8. And 1/8 plus 1/8 equals 1/4. Sort of like if you maybe look at a ruler and we're looking at a 1 inch, right? This is the halfway mark. This is 1/2. This is 3/4. This is 1/4. And then this subdivision of 1/4 into 2 equals is 1/8. So 2/8 equals 1/4. We're just lowering that rate of 6.375 by 1/4 or 0.25. Let's look at it let's see how they did it. Let's see what the way they drew it out. It might be a little neater, might be a little easier to read. Here we go. Number 9, 2 points equals 2/8 or 1/4 of an effect of 2 points on the mortgage yield. So 6 3/8, which is the same as 6.375, by the way. 6 3/8 minus 2/8 gives us 6 1/8. So they're using fractions. We used decimals. Whichever one you're more comfortable with, use that one. But you're going to probably need to have some familiarity with converting improper fractions to compound fractions and vice versa. Compound meaning a whole number and a fraction like 6 3/8. An improper fraction meaning a big number over a little number. That might be useful. 6 1/8, for instance, would be 49/8, right? We didn't need to do that part on this problem, but that is number 9. Let's take a look at 10. 10 says a property has just been sold for $189,000, in which the appraisal indicates an appraised value of $187,500. So what's happening here? The purchase price is $189,900. That's what the buyer agreed to pay for the property. But problem happened. There was a problem. The problem is when the appraisal came in, the appraiser could not justify the $189,900. The appraiser, she couldn't come up with enough comparable sales that sold recently to prove that this house, the subject property we're dealing with, was actually worth $189,000. The best she could come up with based on the past recent sales was a value of $187,500. The lender cares about the lower. The lender is going to bank the loan based upon the lower of these two numbers. So that loan is going to be a 90% LTV. 90% loan to value ratio. 90% of what? Not 90% of the sale price, because it came in and appraised lower than that. So 90% of, in this case, the appraised value. When it all works well and nicely, the appraisal comes in at or above the purchase price. But that's not always the case, because if the appraiser can't find proof that things like this house are worth it, then they just can't appraise it for that full sale price value. And that's what's happening here. So the lender agrees to make a 90% loan to value mortgage at what percentage? 5.625. Let's see if we even need that. Because don't forget, the test question might very well give you more information than you need. Okay, 90% loan to value mortgage at 5.625 rate with 1 point collected for a loan origination fee. They're calling a loan origination fee a point. Anytime you see the word point, just know that means 1% of the loan amount. So don't let that freak you out. So 1% origination fee, assuming the investor demands a 6 1/4 or 6.25% yield. Yield, what's a yield? It's profit to the lender. It's profit that they want. What would be the total amount collected for all types of points at the closing? Meaning the points of origination fee plus the points that are discount points. Okay, well, we know the origination fee. It's going to be 1% of the loan amount, also known as 1 point. So we've got that one. We got that one right here. We know it. Now we need to figure out How many discount points are going to be needed to accomplish the goals here? The lender will only make a loan. Sorry, the rate they're charging is 5.6. I'm sorry. Yeah, 6.25. The rate the lender's charging is 6.25, but the rate the borrower needs, which is the rate that the lender is willing to give them, provided they pay them some points, is 5.625. So 6.25 is what the investor wants. The investor is the one giving the money. The investor is not the lender necessarily. The investor is where the money is sourced from. The lender is the one putting the loan together. So the lender promised this rate. The investor wants to make this much money. They don't care how they make that money. They're okay making this 6.25% worth of money in the form of longer term interest over the life of the loan, or some of it being upfront prepaid interest because the borrower needs a lower rate. The borrower is willing to give the lender a chunk of, or the investor a chunk of money upfront to get a lower rate over the life of the loan. So we're just going to subtract what the investor wants, subtract what the borrower rate needs to be. So what's 6.25 minus 5.625? That is 0.625. And how many points is that? Well, first of all, 1/8 is 0.125. That's the decimal of 1/8. So how many 0.125s are in 0.625? 5 of them. There are 5 of them. 5 of these, here we go. 1/8 has 0.125. That's what the decimal version of that is. How many of these 1/8s are in this number? If you do that math, 0.125 divided by, 0.625 divided by 0.125, that gives us a nice easy number of 5. That's how many points we need to buy. So the question is asking, what would be the total amount collected for all types of points? Well, we need 5 points to lower the discount, to lower the interest rate. We need 5. And then don't forget, we needed a 1% origination fee. So we need 6 total percent of the loan amount. And we need to figure out what that loan amount is. It is 90% of the appraised value. So the appraised value is 187.5. 90% of that is 168,750. So that is our loan amount. I'm going to multiply that by 6%. Total of $10,125 is what we need to bring to closing to pay prepaid interest, to give the lender yield so that they will agree to charge a lower interest rate over the life of the loan. $10,125 is how many dollars 6 total points are going to cost. One of those points is the origination fee cost. The other 5 of those points are the discount points needed. So let's double check. Let's see what their math looks like. They've got 187.5 times 90% to get the loan amount. They did use the appraised value like we did, so we're good. We have the same loan amount of 168,750. They subtracted the 5.625 from the 6.25. In other words, they subtracted the rate that the lender is willing to do the loan on, the rate that the borrower needs it to be made at. They subtracted that from the rate the investor wants to earn. The investor wants to earn 6.25. The borrower and the lender want the borrower to only have to pay it at a 5.625 rate. So what's the difference? A decimal of 0.625, which is the same thing as 5/8, which is the same thing as 5 discount points. So it's 5 discount points plus, don't forget that point for the origination fee, because it's 1% origination fee in this case. 6 total points, which means 6% of the loan amount, which means 6% of 168,750. $10,125 total cost for all of those 6 points. And that is 9 and 10. If you have any other questions, feel free to let me know. I will do another one of these and help you get straightened out. So I hope you have good luck and just keep on studying. Keep at it, guys. We're in the thick of it now, so don't give up. Keep on working hard because we are in the big chapters right now that have a lot of test problems coming from them. So reach out. Glad to talk to you.